All right, guys. So let's get into our weekly trading outlook. All right. We'll basically look at the market and see what we got for the week regarding our strategy. All right. I was supposed to do this video on Monday, but Monday was my birthday, so I didn't have time. But we still have some few pairs that I'm looking out for. So why not share it with you guys? All right. So for people that are watching for the first time, we basically do our top-down analysis and then possible POIs, and then we wait for what happens during the week. When we see a valid confirmation, we basically enter, all right, and then I might be giving the trade, or sometimes I do give the trade at entry on my Telegram channel. So you can join my Telegram channel as well. Just type SAMMMYYESE on Telegram. Right, you see my group. Okay, so let's do a recap for those that are watching for the first time. Our strategy is predicated on our 4 to 5 rules. Yeah. So the first thing is that we're waiting for a sweep of liquidity, which is inducement now. Of course, we know that inducement is a deliberate move by the market to trap traders into entering trades early. All right. So we have a sweep, and then we have a break of structure, and this is transactional liquidity, and then we have structural liquidity forms, right? Break of structure here. So we're basically waiting for price to, come back here and then boom to the downside. All right. So here's our first sweep, right? And then we have a break of structure. Okay. And then we have a second break of structure, right? So this is our structural liquidity to be taken out. And then we have here as points A. We have here as point A. Yeah, structural liquidity as our point B. And then our target as a point C. So this is basically my entry points here. And then, yeah. All right. Of course, there are other confluences that you'll be looking for the strategy, like a confirmation entry and all that. All right. So this is for the type A of my strategies: sweep of liquidity, break of structure, structural liquidity, which is B, second break of structure, and then price basically tapped on our POI and boom to the downside. All right. So if we invert this, you have this for the uptrend. All right. And then we have the type B, just a slight difference. All right, type B. So basically have what a sweep, but structural liquidity has to form first for breaking the free structure now. So we have here as our sweep. All right, and then we have an inner break of structure after formation of structural liquidity. And then we have a full break of structure. So these are structural liquidity. And then this our point A. So price basically has to, come here and then boom to the downside. So we have this, like this, like this. Very, very simple. All right. And this is a strategy that made me profitable in the forex and synthetic indices market. If you can learn it, you can start earning very, very well. All right. So if we invert this, let's just, all right. So if we invert this, can have it for the uptrend. All right, so we have a sweep, and then transactional liquidity, structural liquidity, so points B, and then price has to take out this structural liquidity, tap our POI, and boom to the upside. And this is type B, a sweep, right? And then structural liquidity And then, sorry, structural liquidity is here. So we have this as our A. We have this as our B. And then we have this as our C. All right, so it's very easy. If you can get this structure, you can start making cool fonts even without joining our mentorship. All right, but of course, there are more confluences to this, like the top-down analysis and then um precise entry and all that. So top-down analysis is just saying that we have to have this on the higher time frame. All right. And then when I have this on the higher time frame, I have to go to the lower time frame, like the 1 hour, and then look for same structure. So if price is, coming down like this, I have to, wait for either the type A now or the type B. All right. And then have it as my POI. All right. So this is basically what we'll be working out with. We'll be working with for this, for our outlook for this week. So this become our POI like this, and then we're expecting price to, follow the trend, and then this become our target. Same thing for an uptrend. All right, so we have to see price coming like this on the higher time frame, 24 hours, monthly time frame, weekly time frame, and all that. And then we have to see or look out for the same structure to follow the trend, and then here becomes our target. All right, so let's get to the charts. One few currency pairs that I'm waiting out for. All right, like NZD, JPY, and all that. So first of all, let's do the top analysis. So same thing, right? We have the sweep now, all right, and then price broke an inner structure, which makes this our type B setup. This is the 4 hours time frame now. So we have this as our full breakout structure. All right, so price has to basically come here and then go to the downside. All right, but price didn't respect this one. So we have another structure here as well that price respected. So we have this as our sweep. All right, we have this as our first breakout structure now. All right, so this is also the type B. Structural liquidity forms first before breaking the full structure. So we have this as our full breakout structure. So price tapped on it, and then we have price go to downside. So this is the higher time frame, and then we have here as our target. So we're expecting price to, come down here. All right. But now we have to look for our entry on the lower time frame. We already know where price is coming from. All right. We already know where price is coming from. So we have to remove this and then look for our entry. So we go to maybe 30 minutes or the 1 hour time frame and then check for our entry. So I have a very tiny sweep here. All right. And then we have this as our breakout structure, which is the first breakout structure. And then price basically retraced and gave us structural liquidity, which are expecting to be taken out. And then we have our second breakout structure here. Okay, and then this becomes our high. So we're expecting price to, come here, and then we have price go to the downside. All right, so if you see a valid confirmation, you can enter the trade or basically join my Telegram channel. Join my Telegram channel, and then when I say valid confirmation, I'll also give it out as well. So you can save this as my first outlook for this week. SVDJPY. Why anticipating a sell. All right. And then we also have CAD CHF. All right. So CAD CHF just gave a top-down analysis. So let me remove this and do it again. So we have same rules, right? We have a sweep here, and then price, book structure. Sorry, form structural liquidity first, which is this, and then broke structure to downside, all right, which is this. There's an inner break of structure here. If you zoom this out, you see after the formation of structural liquidity, so our point B, like I explained earlier, then price broke the full structure. So we have this, something like this as our first break. What's supposed to be this place at time? As our first break of structure before price broke the full structure to the downside. Remember, price has to break the full structure to the downside for it to be a valid setup. All right. If there's no full break of structure, structure is not valid, even if we have a good structural liquidity. But if you don't have this break, structure is not valid. So take note of that. All right. So this becomes our point of interest, our point of entry, and then we have this as our target. So this is basically our top-down analysis. Now we have to look forward for entries on the lower time frame. All right. And then on the 30 minutes time frame, I have a sweet entry that I'm looking out for. All right. We have something like a tiny sweep here. All right. And then price basically formed structural liquidity before finally breaking the full structure. All right. So we have this as what? As a point A. All right. Structural liquidity as our point B. And then where price, coming from as our point C, which is our target. Okay. So we're expecting price come here. Expecting price to, come here. And then boom to the downside. Like I said, there are other confluences to this strategy, and one of it is the 5-minute supply zone. All right. If you want to have a precise entry for this strategy, you have to use what? 5-minute supply zone. Okay. So I just decided to add that for you guys so you can know. All right. So we have our sweep, structural liquidity, full break of structure, and then we have our second break of structure. All right, so price broke structure first, from structural liquidity, and then broke structure again. Okay, so this is the type A. All right, this is the type A. So we have here as our entry, and we're expecting price to, come to the downside, and this is our target. So you can save this as your outlook for the week, and then we see how the week goes. Remember, no good confirmation, no entries. All right. And then for my other pairs, there is no good top-down analysis. So I'm basically still watching to see if there will be good top-down analysis. And then we can enter. All right. If I don't see top-down analysis, I mostly do not take the trade. All right. So that's, I need good confluences before I take any trade. All right. So this is basically the model. I should go through it again. All right. So we have a sweep, right? Which is mostly called inducements now. All right. And then we have a break of structure, which is transactional liquidity used for the correction of the market. And then we have structural liquidity, which is used for what? Continuation of the market. So after the sweep of structural liquidity, price has to continue, to the direction of the trend. All right. If you can see this, you're supposed to know that this is a bearish trend. We have series of higher highs, higher lows, lower highs, lower low, and then a sweep of the previous lower high now is our first sweep, and then we have price break structure to the direction of the trend, which is our transactional liquidity to show that the trend is valid. All right, to correct the trend after sweeping this lower high, so price has to correct the trend. So with this correction, we now know that the trend is still bearish. All right, and then we have structural liquidity forms, which is basically used for continuation. So when price sweeps this structural liquidity, it has to continue to the direction. It is a downtrend. All right, so we use this for our top day analysis, and then we use this for our entry. So same structure here. All right, same structure here, same structure here. And then we have the type B, a sweep now for our lower high, right? And then price has to do what? Form structural liquidity first before breaking the full structure, and then boom to the downside. So this becomes our target. And of course, we have to have this on the higher time frame, and then we look for possible entries on the lower time frame. Now, for my strategy, any of them can form interchangeably. All right, we can have this on the higher time frame and have a type A on the lower time frame. All right, it works. All right, if you see it, it works. You can use them anyhow you see them. All right, the two of them works. Okay, so for synthetic indices pairs, I'm just looking out for V 75 1S. All right, V 75 1S. So let's check that together. All right, so V 75 1S on the 24-hour time frame is coming from a POI around here. All right, if you go to the lower time frame with 25, you will see it there, and then we have a target here. So yes, I have an entry on the 15-minute time frame, if I'm not mistaken. Okay, we have this as our sweep of liquidity now, and then we have the break of structure. Okay, so price basically retraced, give structural liquidity, and then we have this as our point A. So we're expecting price to come here, and like I said, for precise entry, I use the 5 minutes supply zone now, or demand zone, any of them. So this is my entry, and then I basically wait for the confirmation somewhere here, and then I have price go to downside. But this trade is a low probability trade because price has gone too far. All right, this is more than 1:10. Okay, so it's low probability for me, but if we see a valid entry, we can risk something on it. All right, this is the only synthetic pair that I'm waiting for this week. Probably next week we'll see what happens. All right, so wait for valid confirmations and then apply risk management. All right, if you don't see confirmations, you're not supposed to enter any trade. All right, wait for a valid confirmation before you enter so that you don't lose the money to the market. And then when you are entering, you have to apply good risk management. You have to apportion your trades so that you don't lose all your money just to one trade. And then when there are good trades, you won't have any money to enter again. Okay, so wait for good confirmations before you enter, apply risk management, and then look out for more pairs on my Telegram. All right, look out for more pairs on my Telegram. And of course, if you want to join my advanced mentorship, you can send a DM. All right, so this is for my Telegram. All right, this is for the Telegram. And then if you want to send me a DM on Telegram, you can use this. You can use this. All right, so see you guys on my Telegram during the week, and then on Monday for our next weekly trading. Absolutely. All right, see you guys.